Right, okay, let's take a look then. Firstly, at the macro indicators. Well, no, before we even do that, let's look at Bitcoin, right? Because Bitcoin is pretty much saying what we did, right? We're saying up and until you flip those diagonals, you're not going anywhere on Bitcoin, right? So let's look at what happened. Fifth resistance fan, V1, the same level we're talking about, right? This is the one I put in the chat saying, like, for Bitcoin, wait, hang on, not this one. This one here, for Bitcoin to go higher, we need to flip that level, right? That blue line, right over there, that's the one we talked about. Is the exact same level, right? That's being used as resistance, right over here. This is the exact same one. Again, for you, Bedshaker, and Miss Miranda, for you guys, who are not as familiar with this, the reason here is, both of you have yet to actually get into the Fibs lesson, of course, but what we have here essentially is diagonals, right? I've got my own fib settings, I've got my own rules with fibs, right? And based on that, we've got diagonal applications of those fib ratios. The reason I like diagonals is because whereas horizontal levels simply give you key levels based on historic action or historic, price, which is nothing wrong. You need to learn to find this, very important. Diagonals give you a different perspective. They do the same thing. They give you historical price action, but they're doing so with basis to time and trend, right? So this is now, think of these more like dynamic support resistance. Look, because in terms of actual historical data, right? In terms of what's already happened, to the left of the chart, right over here. Once we got above this zone, right? Once we got above 74k in which we hit in 2024. Once you broke out that in the latter half of 2024, you have no data to the left. So you don't have any way to put support resistance down in terms of key historical levels, right? Whether that be buy seller zones, key inflection areas, whether that be just normal support resistance, you have no way to actually know where we're going to go. The only thing you have at your disposal is wave structure, fibs, and different application of fibs. Those are the only two things you really have, right? Wave structure and fibs. This is now an application of the said fibs, right? This is especially diagonal. In terms of historic price action, you might not have any data to the left based on horizontal levels, but you definitely do in terms of diagonal, right? If I was to mark this out, take a look. 618 down to the 702707 right over here. There is no argument that that is historical data, right? What's happened? Every time you've turned the 618 into resistance, you've gone to visit the 702707, i.e. the liquidity rate in my system, right? Anytime you've held that as support, you've gone back up to the 618. Same thing, ping-ponging back between until you lost it. So what was our 2024 move, the initial one? That was a bearish backtest, right? You had the breakdown that was never retested. This was the retest of that breakdown. Initially, it was still a rejection. It was still resistance, right? So let me turn these off once. This majority of this, right? Now that you get the picture, let me turn that off. That was still resistance, right? Which is why we see that rejection. And again, for extra confluence, we see aggressive buying coming in, right? There's market longs being opened, market buys in terms of spot, right? But what we don't see is of a reward, right? These aggressive buys were not rewarded because do you see a single candle body close above this zone? You do not, right? So you're telling me there's all of these aggressive bids coming in and yet you can't close above, right? That is a clear sign of what we call buyer absorption. Okay, buyers have been absorbed. We say all these aggressive market buyers, right? All these aggressive market longers, market buyers, whether it's perps or whether it's spot driven, right? That aggressiveness, right? The demand that is a result of the aggressiveness was not enough to absorb the passive limit sells / passive limit shorts in that area. Okay, so the aggressive liquidity was not enough to overcome the passive liquidity. Okay, so what we say is the aggressive buyers got absorbed by the passive limit sellers, right? And once the aggressive buying subsides, because you can't keep that up forever, what happens? You get a pullback because you don't have no more buying pressure, right? All that buying pressure that was originally there, that's dropped. Right? Then what we get is in 2024 you get a close within the zone, right? You get a close within, and of course that doesn't mean shit. We closed over here as well, but then you get follow through. As soon as you broke above that 702, what did you do? Ran straight up. It was your first resistance, of course, the 66, but your proper top, literally following historic price action. It was at once again the 618, right? And when you've eventually lost that, where did you come back down to? 702, same thing, right? The only difference is you did not bounce from it as support. You closed below. And now this is a bearish back test of what was once support. So we know if this remains to be liquidity and buyers just can't overcome, we can't be surprised if it then relents and go back down. Right? Now, in terms of this, you're going back down over here, but of course we also know that you can put the macro on, right? So what is this now? this is based on the low to the all-time high of previous bull run, right? 2021. Where did we bounce off? The 618, right? So then you turn both of these on, you now have, even just in terms of macro uptrending fibs, you have key reason why you rejected here, you have a key reason why you bounced here. So you wouldn't be surprised if you actually did this for a bit, right? Chop, look, you literally did that here, right? Chop is normal. You wouldn't be surprised if something like that were to come along again, right? And I'm going to put one more on. The last one I'm going to throw on is this one, right? So if you take your high to low in terms of diagonals, right, where you rejected off again is the 236214, support at 13114, and the last support right now is the 1.05. And again, you learn about what all these ratios mean once we actually progress into the one-on-ones to the respective sessions, right? But for now, just know what this means is we're now currently in the front run of the liquidity range. So if we can hold here, we wouldn't be surprised if we went up without testing the 68, 69k area. Wouldn't be surprised if it went. Right? But now we put these three in tandem, and now we have a very clear vision. We need to get above this level if we want to go higher, right? We need to, and we have time to do so, because look, this level is intersecting all the way through to September, October of 2025. So everyone thinks bullish now, bearish now, but what if we get some chop, exactly like we did right over here? What if we actually get a kangaroo type of market, right? That's the term going around nowadays. Because what we need is, by the time this time frame's over, by the time September's over, ideally you want this to be support. You don't need it to be support right now. It can happen, which is great if it does, right? Early cycle, we go higher, quicker. But you have time on your side, right? You have up until, let's say even the end of September to turn this, early October to turn this into support. And historically, seasonality-wise, we know that the last quarter tends to be the most bullish for Bitcoin. Right? So we could very much have a delayed cycle scenario in our hands for all we know. But if you aren't considering the diagonals, you just wouldn't have that in your mind. You'd simply be looking at horizontal levels, and that's it, right? And again, there's nothing wrong with that, but this gives you a completely different perspective. You're just not going to get simply from looking at horizontal levels, right? So it's the exact same area where we've got what was once support. Firstly, this and this are both resistance right now. Not a good look, right? We could have a pullback here for all you know. That pullback would actually send us higher. Who knows, right? But until you get above this, you are not going to go higher. It's as simple as, which is why I gave this warning ages ago, right? Until you get above, don't start putting all your eggs into one basket. You gotta have time in mind as well, and around all this is where the 20-40-40 was created. Never go all in until trend is on your side. On the higher time frame, trend is on your side, but on a more local scale, on the daily, 4 hours, so on and so forth, trend is not on your side. The last lower high that led to the lower low wasn't taken out. You put another lower high in. You are not going to be surprised if trend now continues and you put another lower low in. That is literally the trend. Okay, remember, as traders, right, we are not a juggernaut or anything like this. We are simply surfers, right? What do surfers do? They do not go 90-degree perpendicular to the wave to try and go through it. You're riding along the wave, right? The trend is the wave. The wave right now in the daily anyway is to the downside. So yes, if you're bullish higher time frame, because of course the weekly is the wave is to the upside, we're going to take that into account, which is why we're not going to remain ultra bearish when you see buys taking control like key areas, right? You're going to start building your positions, but you're going to do so in a way where you're not going to go all in at once, and you're going to lose 40% of your port if you're wrong. You're going to manage your risks here, right? No FOMOing, which is why this warning was given way ahead of time. Now, of course, pair the diagonals up with the fact that the historical price range 5 mids were finally tagged as well, right? So if we would go over here, we go to Bitcoin. Now this is something we were talking about for a long time. Hang on, let me go to focus. I was saying, look, you know, below you're either going to get the key inflection area. Again, you guys know how the key inflection area system works. If you break above a key inflection area into a new range chances are you're going to run to the mid, and then if the mid literally provides no resistance, you run into the high, right? Which is what we got here. The mid provided no resistance, you ran to the high. If the mid is ever lost, however, right, you either go down to key inflection area or you chop around until the mid is reclaimed. What you don't want to see is the mid being turned to resistance, because now you're saying the mid of this historic range is now resistance. You would not, again, from this system, you guys know, we've done plenty of back testing with this. You guys know, right, in the system I've created, that if you turn the key inflection area, the historical price range mid into resistance, there's a very high likelihood of you then going to target once again the lows of that range, which is going to be your key inflection area. Right, so we are not going to be surprised again until right 88k basically, until this level is reclaimed with force. Target still remains between 73,757 and 64,898 for now. Right, if you're going to have a massive sell-off, wicks right? Wicks towards 62k basically, but I wouldn't want closes there, right? I want that if we were to get that scenario, because obviously that's a pretty decrepit scenario I'm talking about. If we do get that scenario, I would want closes above the mid of the KFA R4 R5, i.e. closes above 2021 all-time highs for me to remain bullish and for us to push higher. If we start doing this and you literally start turning all of this into resistance, then you're running out of reasons to actually remain bullish up here. You're clearly seeing distribution, right? So this is why, like I said, especially in core, what do we learn? We learn, one, find significant levels. Number two, learn to read price action at those significant levels. And number three, learn to manage risk once you have read the price action, determine an edge based around those significant levels. That's it. That's your secret ingredient. You do not need anything else. That's your secret ingredient to actually be a profitable trader, right? Because there is no way on earth you're going to take 10 trades, right? And you're going to get stopped at 10 trades in a row, especially on the higher time frame. Right? Either you've misread the market severely, or there is something fundamentally broken with your system, right? Which, again, I'm not trying to sound like a dick, but my system isn't, right? So all it takes really on a higher time frame perspective, right, to stay profitable is this. You don't need anything fancy, right? Everything else now is confluence. It's to help you to make your life a bit easier. It's quality of life, but the backbone, what's actually going to build you up as a trader, is just this. Don't overcomplicate it. Okay, just these three things. That's all we're focusing on. Learn to find significant levels, learn to read price action at those significant levels, and then manage your risk. Once one side shows you an edge and you think, right, I'm going to go short or I'm going to go long, just manage your risk. That's it. There is no secret sauce. That is the source, right? But that is Bitcoin. I went on a little bit of a tangent there, but just, freestyling it a bit. So, but is there any questions on Bitcoin before I move forward? Just keep an eye on the chat as well. Just keep an eye on the chat. Yeah, this is recorded, Miranda. Yeah, welcome, guys. Always nice to have people in here. Right, okay, so that's Bitcoin. Nothing much has changed. If you guys have questions, just use your mic, speak up.
Quick question on Bitcoin.
Yeah, of course.
Could we be seeing on the lower time for like the daily inverse head and shoulders starting to form here? Or
okay, remind
would
me.
that higher high?
Is inverse
Say
the
again?
upside down one or the smiley face one?
Yeah, it would be the smiley face
The
one.
smiley
Inverse
face.
would be yeah.
Yeah, I do see a smiley face. The smiley face I'll be looking for is right over here. Okay, so lower time frame. Again, daily is a lower time frame, but for our reason it is daily buy zone right there. Right, you have initial support, massive rate on liquidity. If you can reconfirm this as support, and on the hourly, for example, you start to see reclaims of the mid, then you can try and take a risk managed long based around the flip of 83049 to try and ride this back to the upside. Because I wouldn't call this an inverse head and shoulders, because the neckline is completely whack, right? That's a really mad neckline.
Yeah.
You'd want the neckline to be straight, ideally, or at least on a clean diagonal. That's way too much for me, but I would call it a smiley face. A cumulative structure. Should we hold though? It's dependent on do we hold this or not. Yeah.
Okay. Cool. I was kind of seeing it. I just wanted to double check, see what you're seeing.
Yeah, for sure, brother. That could very well pair up to be a smiley face before we go high. Because the thing is, we do not need to hit 70, 73, 71, 68, because those are the obvious targets, right? Especially like around 73 to 71. Those are the obvious targets. So I would not be surprised if this is the bottom. Why do I say that? Because this would be a really nice front run. How many people are still waiting here thinking, oh, we're definitely gonna get this, right? We might not.
All of CT.
Literally, right? Yeah. So
Yeah.
why would then they give you that perfect entry, right? They're gonna make it hard. They're at least gonna make it very hard to catch. So either I wouldn't be surprised if this gave you another pump up. People started firming along again, then they gave you the dump. Or I wouldn't be surprised if by the time you do get there, you get a deeper pullback than people think, right? People get wicked out. Big liquidation wicks happens all the time, and then you reclaim it, then you go higher. Right, something like that I want to see, which is why I've got again that as a potential target, right? Between 62, just in case we get a deep wick, 62, and then reclaim that with force is what I'd want to see. But yeah, this key inflection area is what needs to hold ultimately. Yeah. But okay, that is Bitcoin. So let's leave that. Oh, hang on. Jesus Christ, one sec. I'll delete this and I'll delete these three. I'll leave that on for now. Okay, so let's move on to our macro indicator chart. So Dixie first and foremost. You know what? I'm not even going to bother looking at the Dixie right now. Still ranging. Nothing much has happened. It's very uncorrelated right now. Right, we're not seeing the usual correlation. Dixie going down as Bitcoin's going down. Dixie's going up as Bitcoin's going up. The usual correlation just isn't there right now, right? So I'm gonna pay more attention to USDT dominance, USDT plus USDC dominance. Now USDT dominance, right? Again, coming up to this, very easy to see that you could very well be putting a inverted smiley face in here, right? So if we do go and once again, SFP this area, then I would take that pretty seriously. That would correlate with perhaps we do get a bigger pullback. Sorry, a bigger pullback on USDT dominance, i.e. a bigger pump in the market, right? Bitcoin goes higher, alts go higher, and then maybe you get something like this, and then reclaim, and you get one push up. If just throwing ideas, but something like that could happen if the distribution here plays out, right? So that's something to watch out for. Around the 6-month seller zone high, right? And we've got, of course, the monthly seller zone here as well. In this case, monthly buy zone over here, but we've got that going for us too. Very clear support resistance, basically. I'll just extend this to the left. You can see, right? Very, very clear support resistance. As long as we're below this, then we've got room for further downside on USDT dominance. Especially if, once again, we do close below this zone, that is a higher time frame distributive pattern, still confirming, right? Not fully confirmed, but en route to confirming on USDT dominance. So, very good. I think this is very important to keep an eye on USDT dominance, right? You can look at USDC dominance as well, of course, because now I know USDTs are going to be delisted in things like Coinbase on Europe for some reason, right? So USDC dominance is important to look at too. You can look at USDT plus USDC dominance, right? I like looking at this one. Same thing. You're under resistance, right? You're under very, very big resistance right over here. Your 764,786, right? Is still acting as resistance. You don't have enough buying pressure yet on this to go above. You're trying, right? But right now you are again below severe resistance, right here. You have a weekly seller zone, and if you do this, you could very well once again distribute and send lower. Again, if the cycle isn't over, which I don't think it is, and we still have more bullish phase in the market left, I would love for this to actually mark the bottom of this bull market, or the top of this bull market, sorry. We've got this 886, confluence with the 0.9, that'd be absolutely amazing, right? We've got till 2026 for this, like I was saying, right? So we could very well get a delayed cycle scenario, which is why I keep saying, don't put all your eggs in one basket too quick, right? 20, 40, 40, wait for those significant triggers, like, key resistance is being flipped to support, trend shifting on the higher time frame. Those are your triggers to slowly size up, right? Otherwise, you're simply just managing your positions down over here and making sure you do not lose too much if you do get stopped out. And if you're in profits, putting your stop loss to break even. I'd rather you get stopped at break even and just be more active, more dynamic trading, just re-entering, exiting, entering, exiting, especially on spot, than just hold one in the red. And there's no confirmation yet of a bottom, right? Rather prefer one of the other. But yeah, on the higher time frame, the thesis hasn't changed. Still, if distribution confirms, I think we're looking good to push back lower again on these, right? Which would be bullish for the market. So Bitcoin dominance for this one, I'm going to go over here. Let's go to master list. Let's go to Bitcoin dominance. Same thing again. My thesis hasn't changed. This crab, right? This deep crab I pointed out all the way back in. This was basically start of March. We were like, okay, look, 886, 1.618 would be a target. And this is what I mean when I say harmonics are not affected by time, only price, right? Because look, this is not a classic W shape, right? This is what most people think. In reality, we end up getting something like this normally. Right, so it's taking a sweet old time getting there. You could go there in April, who knows, right? But the target is 1.618 first, right? Maybe you get there, maybe you go and then you flip this into support, and then you're finally I'll be looking for after that. My higher time frame target would be the 1.618 of the bigger 618 structure ABCD here, ABCD, lining up with a 2-week fair value gap mid, right? And then from there, just maybe I want to see distribution here to say, okay, Bitcoin dominance looks topped out. Otherwise, I think if you literally no sellers here, you're running straight to 70. There's nothing. Okay, mark my words, you're gonna run straight towards 70% and higher. That's historical price action speaking. I'm not pulling that out my ass, right? You're gonna go higher. So that is Bitcoin dominance, right? Nothing much has changed. Literally, it's very slow, but it's there, right? The key levels that need to be held, your yearly levels, your not yearly levels, but still key levels, your wave structures, they're still in play. Nothing's changed on the macro, right? Which is another thing. I haven't had a reason to be very active. It's like on the higher time frame, nothing's changed, right? You're going up, making lower highs, coming down. That's it. We just enter longs at the lows, and you take scalp head shorts on the highs. That's it. But that's Bitcoin dominance. Ethereum dominance, right? This, keep looking at this. I really hope this bottoms out soon, because otherwise, I think you go out to take out your X point, and that's going to be absolutely disgusting. A high cap like ETH, right, the second biggest crypto there is, making a new low against its dominance. That'd be absolutely ridiculous. It just shows the weakness of ETH, right? But we do have a multi-year wave structure again, X, A, B, C, D. That structure is from, again, 2019 all the way through to 2025. You do the maths, right? That is at least minimum 4-year wave structure, right? Accounting for like in lateness, earliness of the minimum 4 years. 4 years is something months. It's a very high time frame structure. We pay attention to this. Now, the higher the time frame of your wave structures, right? It's not uncommon to see more chop at the PRZ before you actually bottom out. We saw this with AVAX, right? We saw this with AVAX. We've seen this with XRP. We've seen this with many coins, right? So the higher the time frame, it's not uncommon to see some chop go a bit deeper, perhaps towards the hop, right? But ultimately, this is the area where we see bullish structure come in. That's it. I don't care if we bottom at the 886. All I want is confirmation that, okay, sellers are trying to take control, they're not succeeding, structure turning bullish, key levels being reclaimed, boom, that's all I care about. You've got more than enough reason to then execute with size when something like this comes in, right? Right now, you have no reason to execute based looking solely at this chart because yes, you've hit a harmonic, but you have no follow through. Absolutely none. You're losing your key levels, in fact, on the yearly, right? So ETH dominance, keep an eye on this one, right? Definitely keep an eye on it, but don't be too hasty with this one, right? It's hit its level, now it just needs to settle down, cook a bit, that's it. So that's ETH dominance. Let's look at total, right? Again, pump up, straight back down, but now again, as long as you're holding this zone, right? Again, this is the one we were talking about in the purple. If you look at the monthly, right? Let's make this easier for some of you, especially Miranda and Bedshaker. You guys won't be used to all of this, so let's turn that off. We'll take this bit by bit, right? Here we go. We got these two. Gonna create a group of drawings, hide that as well. Okay, so blue line 2.62 trillion, right? That is where sellers were in complete control on the monthly, right? If we take a look, you have no candle body closes above 2.62 trillion on the monthly, none, right? None until this breakout happened. The reason I marked that down, of course, now is we've got yearly buy seller zones to the left as well, right? Yearly to the left. So we know there's key levels in this area. So you've got the mid of the yearly buy zone, yearly seller zone in this case, right? In 2021, this was the area where sellers took control back from the buyers. Buyers couldn't maintain any control, any form of control here on the yearly is what we're saying. Look what's happening right now. Like I'll just let the chart talk. I don't need to say anything. It's very clear. What's happening is you're attempting to claim the mid of the area where sellers were in control as an area where buyers are in control. That is not bearish whatsoever. In fact, if this is successful, right? And of course, we're waiting at the quarterly right now. If the quarterly is successful, we could very well see a quarterly drop into the lower levels on the higher time frame. But ultimately, right, below 2.19 trillion, you've got everything in the world to be worried about. But on the higher time frame, if you do something like this and then start literally turning these into support levels rather than what it used to be, which is resistance, you have a yearly narrative flip in front of your eyes. An area where sellers were in control on the yearly would then be an area where buyers are in control on the yearly. You'd be looking for higher prices, right? So we've got a key area in terms of the yearly mid, and then also we've got the monthly level where sellers were in complete control before. Even now, look what is happening, right? If we go and again bottom in this area, that is a cumulative structure coming in at an area above the area even where sellers were in complete control in the past, right? These are lower time frame deviations. We know because the higher time frame you couldn't get anything done in there. Right, so hopefully that makes sense, guys, right? But this is literally, again, same as BTC, right? If this holds, BTC is going to hold a smiley face. I'll be looking for moves higher, right? Especially considering, you know, we've got a lot of trend, we've got a lot of liquidity to the upside here. Of course, we've got liquidity to the downside too. But while these higher time frame levels are holding, there's no reason to be thinking about lower until this turns to resistance. The day 2.6 trillion, right? 2.62 trillion, you break down and start retesting it as resistance. Right, SFP's distribution. I'll be the first one to tell you, look, we're going to have a deeper drop than people think. We're going to go down all the way towards 2.19 trillion. I'll be the first person to tell you that. Right, but as long as we're up this mid, there is no point even thinking about this because it's just not going to happen. Right, the more likely scenario that happens most of the time is you break down and then you get distribution structure at the retest. Right, you get very clear signs that what was once an area where buyers are in control is now an area where once again sellers are in control. Right, and then you'd go lower. Right, that's what you'd be watching for. But Total One also looks fantastic. Right now, if the cumulative structure prints, right, if the weekly closes, if the 3 days, so on and so forth, quarterly closes above, that's a good sign. You're looking to go higher. That's a very, very good sign. So that is Total One. Do you guys have any questions? If so, I'll put it in chat. Yeah, sure, bro. I'll look at the XMR for you. Yeah, sure, Miranda. I'll, for whenever you see this, I'll put this on YouTube and put the link in the server. Yeah, I'll check the XMR for a low time frame look. Golden zone. Oh yeah, no, you're completely right. Yeah, we've got the golden pocket tap on total 1. Yeah, beautiful, bro. Yeah, absolutely beautiful. So, we just need this to hold. That's it. And, you can't be too hasty with high time frame structure. Structure does what it wants to do, right? But if we now confirm accumulation, we wouldn't be surprised if we got to push up before we actually got to push down. We could see something like this, local distribution that sends us lower, and then, first, like end of 2025, maybe like first half of 2026, maybe we push, right? Again, if you get delayed cycle scenario, that's what we're going to be looking at. But for now, as we speak, this is the thing to watch for. If this accumulates and the accumulation is confirmed, this is the area where you take risks on longs if you're going to go long, right? If it gets below this and you start closing below, just cut, right? Especially on Bitcoin, specifically in relation to total 1, especially on Bitcoin, right? So that's that. Total 2, nothing's happened, right? Another lower high, you're holding the range mid, but you hit the 886. This could be a type 2 return, right? This could be a type 2. So if you get a double bottom / high low kind of scenario over here, again, first things first, before we even talk about that, let's talk about the fact this could be a smiley face, right? But if you do come down and you have the type 2, right, a raid and a reclaim, or even a double bottom kind of scenario, that's where, again, you'd be looking to get into ETH when this is down over there. Either that, or again, just like with total 1, you wait for this smiley face to confirm, right, over here around the range mid, because in my opinion, that would take you higher, right? So perhaps you're looking at something like this, right, from here to here. So we have a, let's see, what's the best? Actually, no, I'll be doing it like this. So from this high to this low to here, right? There we go. This is 618. You have a 618 retest, right? And then you'll be looking at a 0.886. Something like this, perhaps, right? For chop, you hit the 886 and then maybe come back lower. And again, this would line up with what? If you go to the weekly, this would line up with weekly distribution, right? If this bat were to hit the bearish bat, this would line up with initial resistance, radon liquidity, reconfirmation of resistance that we're looking for, right? So if this holds, again, the smiley face, you're taking that scalp long on, scalp to swing mindset long on ETH to try and target the 3-month seller zone highs. If you flip this narrative goes out the window, you're looking for higher prices. But then if you start to see this distribution happening, then we could get a flush of the lows before we go higher, right? So there's things to consider, right? But where we currently are, again, this is where you're watching that smiley face. This is where you're watching for that smiley face to get formed, right over here. Total 2. So total 3, currently distributing, or not distributing, but chopping around your key level. Nothing much to say on this. Like, as long as you're above some of this is bullish, if you're rejecting here is bearish. Line in the sand for me is get above 788.86, right? Between this zone here. Above that zone, you're above this PK, and you're also above the mid of your mitigated liquidity pocket. Very bullish, right? So basically, get above that zone made by this and this. Just get above that, basically. I'd want to get above that to go higher. Otherwise, you might just see, like again, another like lower high right over here, and then more drops. And if you fully confirm this is resistance, then again, you're looking at what total 2 is doing, right? This is the target you'd have if this area turned to resistance. But which is, it's not doing that yet. It's just chopping. So, we just wait to see a clear break in structure, which you don't have yet, right? It's just making lower highs and lower lows for now. Daily, do we have a smiley face potential here? This is a bit messy, too many boxes, but smiley face again would be here. So again, if you're wanting a smiley face, you're kind of at the area where you'd want to see it, right? Somewhere around here. If this holds, you've got reasons to be in olds, right? If this doesn't, then you might finally actually get that breakdown towards lower levels. Others, 786. You actually, I can't believe you went past the 786. Oh yeah, no, of course you did. So, others, again, this is why I said be careful, right? Because this was now an underside retest of range, right? Here's your range. Very clear support resistance. Here's your consolidation range in the white box. That's your range lows. Broke down, there's your bearish retest, right? That is a weekly SFP right now with a bearish backfill too. That is extremely, extremely ugly candle. If this holds, right, and you do not close above, if the sellers don't relent, then lower time frame 211.49 billion is what I'll be looking for, right? Your yearly level. That's around there. If you lose that, then you have 178 billion. You lose that, 150.49 billion. Predefinable set levels. All we do is wait for structure we can execute on to come in. That's it. You had structure here that told you could execute on shorts because you went to the mid of your range. What do you have? Multiple SFPs. We know what that means. That is distribution, right? And that sends you lower. So either get a reclaim or you get that low. You don't really do anything here, right? It's like you have lower time frame levels here. So again, on the lower time frame, like the daily, like if you're looking for a smiley face, you're going to do so at this area, but the daily's not closed yet. The 3 months not closed yet. It's very close for these to actually close. I'll just wait for those higher time frame closes before really making any sort of decision now. Right? Don't get chopped out on like the quarterly close volatility and stuff. Total DeFi, beautiful. Like we know we have a 886, right? We've rejected off the area we were talking about. You hit the mid, you hit the zone between the yearly level and the mid, right over here of this buy zone from history. Well, not from history, but from February 2025. And you know, as long as you're above the 886, you're fine. As long as you're holding trend, you're fine on total DeFi. You just don't want to, again, don't want to do something like this. Right, because total DeFi below that, you'd be looking at a run of all of these lows here. You'd be looking to run them. And I wouldn't be able to tell you how low you'd go just based off this, right? You'd have to do more TA, wave structures, so on and so forth. But total DeFi looks good. Total DeFi, in my opinion, next to total 1 and total DeFi, are probably the two strongest looking ones, right? Others below resistance. Total 3, chopping about still, right? Total 2, in the mid, not at the highs, not the lows, in the mid, which is good. Total 1 again at the mid, but total DeFi very clearly at support, right? In my opinion, total DeFi actually looks the nicest out of all of the totals. We've got others dominance, and you're still chopping within that zone. Look, we've not lost it whatsoever on the higher time frame. Now these weekly candles are getting more and more obscene as we can see them, right? They're getting more and more flagrant. But again, look, as long as you're holding this zone, in my opinion, right, you have reasons to be in alts, right? If you start closing below, just cut it. But the thesis hasn't changed. Okay, that's total others. I say the same thing every week, so I'm not even going to dive deeper into that and waste your time. Total 3 against Bitcoin. Right now we have a little bit of a weakness coming into the charts, right? On the weekly, you're starting to get rounding. On the daily, you're starting to get rounding. But again, at the end of the day, like you could drop all the way down over here, which wouldn't be bad. It'd be a retest at the end of the day, right? You could drop all the way there. As long as this holds, you're looking to go higher. You're looking for total 3 to eventually start outperforming Bitcoin at these levels. But if you do, however, go and turn these back into resistance, you distribute at these levels, then you're probably going to push lower, i.e. Bitcoin's going to outperform alts for a bit longer before we find that bottom and we can start to look forward to alt season. Right? But that is total 3 against Bitcoin. So, Bitcoin against gold making fresh lows. Not surprising, seeing as gold is making all-time highs after all-time highs. And apart from that, what we have is the CMEs, right? The ETH CMEs and the Bitcoin CMEs. So that is the macro indicator charts done and dusted. Okay, just wanted to go over that as a quick update because I know it's been like more than a week since I've updated anything, right? So just wanted to go over that just so you guys are more updated on what's going on with that. When we look at the macro indicator charts, we looked at Bitcoin. So let me see if there's any questions before I move on. Nope. Okay, let's move on then. If you guys want me to look at any coins, put it in chat or just use your mic as well. We can take a look at it. But let's look at some of our coins, right? So first and foremost, Vanry, right? 49% secured off that low. We were talking about this, right? We had successful retest of the value area low, right? And that was the original talk we gave, right? So this was 50% up. So this one cooked, right? So this is an example of TA. This is why you learn to find significant levels, right? To most people, this is not something you'd consider, but you're looking at TA, you know you're holding the value area low, right, of your entire macro range, and you know that aggressive selling is not being rewarded here. Aggressive sellers are not successful in closing below the value area low. So when you see something like that, you take the trigger because risk is nothing to you. You're not focused here on how high can you go. If you think about that, right, you probably wouldn't enter this because yeah, you could go that high, but trend is absolutely ridiculous. You wouldn't be thinking that this goes to very high. All you're thinking about is, if I'm wrong, how much am I losing? 10%. Easy to manage, right? That's all you're focusing on. How much are you going to lose if you're wrong? And now once again you're losing point of control. So if you didn't take profits on the way up and you got in, like definitely put your stop loss in profits or break even right at this point, because there's no point closing at the point of control. Might as well wait for the daily close, the quarterly close to see do you close above this or not. But if you do close below and you know you just don't have any strength coming in, I'll just close it as long as you're below this. Just re-enter when the point of control gets flipped back into support, right? Again, another way to look at this, of course, is we entered Vanry when we raided 2022 12-month buy zone low, right? That was the entry. So this one was a cook. Trend still doing its thing, literally, right? Very easy to see why we rejected here. It's just a trend. But that's Vanry. Nothing else to say, right? If you look at this on the weekly, you will see very well the higher time frame thesis hasn't changed, right? You know, if you're talking hopium, you're talking to the fact that this area has been supported in the past. You've rated the liquidity, and if it buys successful in basing here again, you do have a informal smiley face, right? Informal accumulative structure. You'd be looking for that push higher. So even if you're not going to new all-time highs, you know, 176% move is more than valid, Right? I don't see any, if you're scoffing at 176% move, I'd reevaluate how you are approaching trading, because that is amazing. Right? That is a very amazing returns. So that is Vanry, right? Solana, back down to our key area, 126.15. You are 126.19. I'll be surprised that this is the area buyers are fighting for. Again, we cannot be. This is our key level, right? Buyers are attempting to reclaim. In fact, if this hourly in 25 minutes closes with a smiley face here, you can look for, again, scalp to swing mindset trades on Solana. I'll put my stop loss below this, right? Let's say the candle were to close like this and confirmation was to open, let's say somewhere around here, right? I'll put my stop loss below this, right? Because my whole thesis is that this is smiley face. So if this gets violated, it's no longer a smiley face. 0.74% risk. What are you targeting? You guys already know. Yearly level is what it is. That's the ultimate target. Initially, risk to reward, anywhere between risk to reward of 3 to 4, right? You're going to take your initial trims there. So the most logical area here would be somewhere around here, right? Risk to reward of basically around 3.75, right? You take your initial trims there. That's what I'll be aiming for anyway, right? And then you're not gonna, maybe take 40% out, and then scalp the swing means from there on you then start targeting your higher time frame levels. If you get here and you actually start closing above, right? Sellers do not actually so severe strength going here, you're not gonna close. Because then if you get above this and you turn this to support, this can happen. What will happen on the left. So there's no point closing too early, which is why I'm a dynamic trader. If you limit trade this, you might be closing a bit too early, right? So, but if you do, again, this is stringent. This entire trade is riding on the fact this 1 hour close is successful. Okay, don't enter yet. If you're gonna enter right now, you need to be lower time frame, like the 5 minutes. In which case your stop loss is going to be even tighter. I'll do this. If you're going to enter right now, this is what you're looking for: 0.4% risk versus you're looking to ride it up towards these highs, right? That's what you'd be looking for if you're looking to actually enter right now. Otherwise, wait for the hourly close to get in. But honestly, that's more than enough, because the beautiful thing about this is if you start getting 5-minute closes below, you can just cut. So even though this is a 0.44% risk, if your 5-minute closes, let's say, below 126.15, right, you're cutting it. Right, you're not keeping it open, you're cutting it. And you're only going to re-enter when you go and flip this back into support. Right, but I'd wait here simply because now that can be a inverse smiley face here, right? That could take you lower. So just wait. If I'd say if you are going to enter here, just layer in 50%. You could enter right now. Actually, there's no point. Just wait for this to get flipped, right? Let's wait for that. If you're going to enter Sol on the 5, just wait for that to get flipped on your scalp to swing mindset trades. Otherwise, you might reject and go back lower again before you go higher. So hourly close, 4-hour closes, those are going to give you a way clearer idea of what's going on, right? But that is Solana. On the higher time frame, however, right, we know as long as you do hold this area on the weekly, right, as long as you're holding this, you're not thinking about lower levels. But should you come and lose both of these and again turn it to resistance, you are not going to be surprised if you get $100, 102, and even double-digit Sol again. That's your next key area. Again, people thought this was impossible, and look, we literally got that in like one candle on the weekly. We got that in one candle. Right, twice we got that in one weekly candles. So never say never, right? That's just the power behind significant levels. It doesn't matter how many levels you have dotted in between, it will slice through all of them to get to significant levels. So if you lose this on the higher time frame, I'd be looking for somewhere here on Solana. That's just it. So keep your eye on that 126.15 level on Sol. Okay, and there's the 5-minute and the 1-hour version of the trades you can take over there, given on screen. So next is Injective. Again, very strong weakness at the key inflection area mid, right? So if we go to the next one, the 3.618 below you, right, it's still going to be support for now. So you have this zone. You have this zone right over here between the 3.618 of the ABCD and the yearly level, right? 2021 12-month seller zone low. So again, if you do visit this area and you once again do see closes above, right, you can take your low risk trades there. Especially if it's a spot, you can start layering in, right? Even 40% if your risk is only 5%, right? Looking to build a position. But should you go and lose this level, ultimately I'm looking at this PRZ anywhere between $6.21 and $4.14 for Injective. Get me that macro shark, get me that deep crab, right? 88 basically 886 1.618, get me that level. Again, thesis hasn't changed on Injective. I see you again grind it up, and then you just absolutely died from you just couldn't maintain any closes above. There wasn't any buying pressure. That's it. There just wasn't any buying pressure. So that is Injective. PRZ still stands, right? Let's look at Ethereum. Now this is one to watch. We have the 87886. We're holding that as support. We know the 6-month buyer seller zone mid is where we're at. Back down to that key area. So this original ETH play obviously would have been played out fantastically. So we're looking to re-up this, right? So you guys got this. This one hit target. Beautiful 4.84 RR secured. If you wanted to long ETH here, it's very, very easy to manage your risks, right? What you're going to do is you're going to take that long, you're going to open it, you're going to mark it open, right? And your stop loss is basically going to be, if you close below slash, just this, right? At 1 point something percent risk, you're targeting the same thing. Back into this zone first. Scalp the swing mindset always, right? When your trend hasn't shifted on the higher time, if you know, when you're counter trading, scalp the swing mindset always, right? We're not going to be heroes and say, yeah, this is the bottom. We don't know, right? Bottoms are only clear in hindsight. It's never clear when this is happening, right? All you have is an educated guess. So yeah, something like this on ETH, right? If you wanted to take an ETH long, very low risk, you could take it, right? And then if you close below, just get rid of it. Very simple. Because below this level, you either enter at the reclaim, enter at the top of the diagonal and the hold of the diagonal, or you enter all the way at 1,500 again. Because we know, even in terms of key inflection areas, we are below the historic price range 2 mid. But you're not going to be surprised if you get $1,500 to $1,450 ETH, right? That's not going to be a surprise whatsoever. In fact, there's one more thing I need to do here that I haven't done yet, and I'm going to do so over here. 1 sec. So that's the low, that's the high. Okay. Let me do that. Zoom in to make sure I mark the bottom. Yes, I have. We're going to go here. Red. Nothing. And then red. And then the text can be, this is your historical price range. And then this is your macro impulse. Impulse from, this is your 2018 impulse. There we go. Settings. Left. Perfect. Okay. Even better, right? So if you go to the weekly now, I can grab this and I can drag this all the way to the actual low, which is right over here. Just gonna give us another key level to watch for. And again, let me go to middle line, make that red. Okay. So we've definitely lost that as support. That is very, very clear to see, right? Support, resistance. We've flipped this month, we flipped that into resistance. So that means in March we've actually gone, and again, yeah, there you go, that right there, right? So nothing, bearish engulfing straight away, Burj Khalifa on the daily, which means that if we then go, yeah, 4 hours aggressive buying coming in, those buyers are not being rewarded, right? As soon as you see aggressive buys and then this, that's your sign saying, okay, we've got a shit ton of trap traders in this area, right? And then if you keep going down the time frames to the hourly, for example, did we have any distributive structure actually come in here? Nothing over here. 15 minutes then. Bound to be somewhere. 15 minutes. Here's your original seller zone right over here. There we go. There's your distributive structure, right? Initial resistance, radon liquidity, reconfirmation of resistance. That is what sent you lower. So those are key levels on ETH, right? So either way, it doesn't matter how you look at it. You could look at it as buy seller zones. You could look at it as, you know, ranges, diagonals. Yes, on the macro, like, you know, your areas where you could chop and then claim a bottom and go. But on the actual lower time frame itself, especially if you're leverage trading, is very important to watch your downside here, right? So this is again on ETH. If you wanted to take a long, something like this, you could go for scalp the swing mindset, with initial TPs being based on risk to reward, and then after that you carry the rest up onto your actual key levels. But higher time frame, like this is not good. That's nasty. That's absolutely disgusting. You broke down and then retested the key inflection area as resistance. Again, we're not going to be surprised if that sends us to the historical range mid, which is where 1,500 basically, right? So that's why I keep saying that target there. We need to lose the diagonals for that, but again, in terms of horizontals, it's possible, right? The only saving grace is if you can now maintain the required amount of the diagonal, then you're not going to get to that level, right? So you're gonna have to go with the demanded trend, the gradient of the diagonal, to actually avoid getting 1,500 Ethereum. Buyers need to step in, basically. ETH against BTC, absolutely disgusting, right? You bearishly backtested the PRZ and now you're below it. This doesn't mean the harmonic's invalidated, right? Higher time frame wise, you could definitely chop around this area. That reclaim eventually will put this back into play. It's just like, how low is this shit going to go? You know, absolutely filthy, and not in the good way. Like, this is just terrible price action now, You just no strength whatsoever, absolutely none. Biggest rounding you've ever seen, right? So yeah, this is nasty. So you're going down towards your standard deviation 2, high to low, value area low, right? So that's going to be high to low, means it's from the last completed high to low is from here to here, right? So you're taking the fixed range volume profile at that, and then it's a standard deviation 2 of that move, right? The value area low is right over here. That is what you're propping up against. And the standard deviation 1 low to high, which is going to be from here to here, value area low is also there. That's your next zone. That's it, right? You go to significant levels. If you don't get significant price action, which you did once, right? Which is why I entered here, especially I entered at the liquidation wick. Right, as soon as I see this level being tapped, and then I see, I'm on the lower time frame, right? I see strength coming in. 15 minutes, 5 minutes, you see strength coming in, you get in, right? But again, you're not getting in thinking I've caught the bottom. Trend is not with you. This is why I always preach 20-40-40, right? It BTC is what it is. It's absolutely filthy. So let's take a look at some other ones. So that's ETH. Let's look at Aptos. Back below the BAT 886 and the Shark 886, which is why this is also another reason I've just not done any additions, right, to my bags, because look, price action hasn't been clean. It's what it is. Everyone's trying to be a hero, thinking they've caught the bottom, thinking they've caught the top. We're just gonna wait for structure to form. We just need good structure to form. Now, if you do get a smiley face here, you can start to look for a cumulative structure. Otherwise, that smiley face with the reclaim would make this even better. Above this, you're looking for higher, right? And above this, that's when you go get the big moves. So this entire range basically is where you actually build a position now. It's not like you go all in at one level, right? Hardly is that ever a ideal entry setup. But yeah, Aptos looks, again, it's chopping, it's holding its structure. It's not going to make new lows or anything. I think this looks good. So if by the time the period's done and we now back into the uptrend, right? Daily goes back to an uptrend and we're in the full bull mode again. I think Aptos does outperform. It's just been very, very strong here, right? Obviously, it's not been making new highs or anything, but nor has it been making new lows. It's literally holding, just going sideways, right? So Aptos is definitely one to watch. And again, compare that to how Aptos against ETH is looking, right? Like I said earlier, it looks really, really good. So that's Aptos. Let's look at AVAX next. AVAX, beautiful bounce. What did we say? Look, it's just a matter of time, right? Just trusting in yearly levels. As soon as 23 was lost, the first thing we said was eventually this is going to come down to 1729. You did. You put lower time frame smiley face there, and then you went back up. Where did you go back up to? The yearly level again. You went back up to the yearly level, hit the trend lines, rejected. Now you're on the way back down again. If you're looking for a smiley face, it's going to happen over here. Okay, so we can go ahead, and that box is still valid because obviously it's between these two key levels. So I'm going to delete that for now to put an emphasis on this, right? If you're looking for a cumulative structure, you're looking for it over here for now. There's your initial support, radon liquidity, reconfirmation of support over here, and then if you go and break out here, then you can look for higher on AVAX. So again, if you're getting quarterly closes, daily closes above this level, right, weekly closes, so on and so forth, then you just size up. You just size. If you're in from the lows with me, you just size up. I'm looking to size up. I've not sized up anything yet, right? So that is AVAX. Again, you can look in a historical context as well. You can see that's a very key level, right? So we just need a reclaim of 2056, and we're good to go back higher. Right, but that is AVAX. Very, very clean. Very, very nice. Let's look at SAY. So SAY, this would have been stopped at break even, right? Right there. You are still in your higher time frame key zone, right? Higher time frame wise, you're literally still. So again, if you're looking for risk to reward, SAY is one of the best stalls out there right now, in my opinion, because invalidation is clear. Look, if you close below 1752, get rid of this shit. Don't hold on to it, right? Because you actually have a macro reason to be holding at this level. In terms of the Shark, it is the 886. Right, so that is SAY. You're around the 886 as well, even if it's not a perfect bottom. As long as this level holds, you're fine. If you do lose this, of course, then you can see what's going to happen is you're going to your next consolidation area, which is right over here. So if you lose the 886, right, 1752, basically, you wouldn't be surprised if you got SAY towards 13 cents next. So that's where I'll be looking to buy, which is why I'm saying invalidation is proper clear. You get below this and close, get rid of it. If you reclaim, add. Otherwise, stay out until you get to this area. Right, but that is SAY. Very, very potent one to watch for, in my opinion. And I swear this had a. Did it have a? Is it this one? Yeah. So you have again what you have over here. If you take a look, right, based on this low, your 1.13 extension is down over here, right. This is exactly the same thing as what Maker did before Mako went higher. Right, so you could get that 1.13 and you could get some sort of like reclaim higher, and you'd be adding here, sizing up here, and then final allocation for the trend shift, and then you've got a decent average somewhere over here on say to actually go higher. The only thing is 20 40 40 always, right? 20 40 40 always, and again 20 40 40 change the ratios depending on your invalidation, right? But this is say looks, again, this is not that it looks good, obviously the charts looks like death right now, but in terms of where it is and in terms of what it can become, right, this is a very nice one to watch here for sure. So that is say. SWI, like I said, hit the long target I gave, right here. This was given in a previous stream. Entering based off the fact that the 886 was hit, the yearly level was hit, the OG range standard deviation 2 value area high was hit. That was the entry, right? And the exit was simply here because we're in a downtrend. I'm not going to give you a target that's all the way up here for no reason, right? We're in a downtrend. You enter here, you close majority of position size at the next key area. If you see sellers coming in, aggressive buying, sellers, but no reward for the buyers, that's it. You go lower. Trend is to the downside. It's simple, right? People overcomplicating it, but trend is literally to the downside on even the daily right now. Right, so that's hit. For SWI, if you come back down, I don't know if you're going to get a double bottom at $2. If you lose that, of course, you guys know my thoughts. 3.618 of the 382, lining up with the low to high, standard deviation 1 value area high. Right, so now, what is MBI? Sometimes I forget my own abbreviations because I'll be doing it in the moment. I'll remember it at one point. I think it's the original range, standard deviation 1. But there's a value area high from a range, a very valid range in here, right? That's what we need to know. So there's a nice PRZ down over there because of the fact there's a wave structure and key levels as well. So that'd be the next area to watch for, in my opinion, if you did go and lose this eventually. Otherwise, again, if you wanted a smiley face, you're looking for it at this area, right? Looking for it at this area. Otherwise, just wait for this or wait for that, right? Very simple. I don't see any particular point entering at this zone, right? I think above this cluster safety, just because when you have this many clusters, where do you enter, right? You're holding this as a zone, thinking, okay, we've got all of these confluences here. Let's see if you can actually get out of here and hold. If you can do that, just enter above the white box. That'd be way easier to manage than here, right? So either you get this, or you just wait for that reclaim, enter there to go higher on SWI. Trump fighting the 886. In fact, currently it's below it, right? It's not a break yet. The aggressive market shorts going on. So if these get absorbed, that's going to be absolutely beautiful. We'll be looking for that move higher. Okay, keep an eye on this. Set an alert for 10.223, basically, the 886, right? Just understand there's a shit ton of market shorts going on right now. Huge amount of market selling. If you can go and bullish divergence off the back of all those market selling, if you can go and claim this like this, right? If you can go and claim that into support, I would be looking for higher prices on Trump. But again, it all hinges on, do you get above this or not? So what I'm going to do is go over here, and I'm going to put a alert down for this level at that general area there, right? So that is Trump. Let me check back to the chat. Okay, so let's look at Ondo next. We've already gone over this, right? Again, this is why always scalp the swing mindset. If we go to Ondo here, what do we have? We have, you're pretty much round tripping your original entry, right? Your original PRZ right here, you rejected, you hit the supply zone, you've came all the way back down. Again, remember, we're treating these as 3 distinct zones, right? Zone number 1, if this holds, that's where you enter. Invalidation is if you lose this. Zone number 2, you go over here. If you lose this, you either add when this gets reclaimed or this level gets hit and buyers defend, right? And if the same thing, if this is ever lost, you're looking at the rate of the lows. Otherwise, this is where you're looking to enter, right? This one looks higher probability to me. I don't know if we get this, but I'd love it if, like, even somewhere here we got this, right? Between 68 to 66 cents, basically. But same thing on Ondo, right? But for spot, you're just going to treat them as 3 distinct zones. That way your risk is managed, but you're entering at very, very key levels. Right, extremely key levels. So 3 distinct PRZs for Ondo. A lot of confluence, M shapes, right? Bigger M shapes, inner M shapes, ABCDs. A lot of confluence for Ondo at these areas, right? So just something to watch for. Visiting the areas again. So you guys will have the recording. This will be on YouTube, so I'm not gonna send any screenshots in, just so you guys can look at that. If I do send screenshots of these in, it'll be in the respective channels, right? So the Ondo call obviously originally was given underneath the old section. Right over here. For those of you, what is happening here? One sec. Let me just switch and then switch back. There we go. Okay. On the left here, right, I'm gonna put all the alts in here. For now, I've only put Ondo in there because that was the cleanest one. As I get more time, because like I said, I've been really busy. As I get more time, I'll put more and more and more in there, like hype, so on and so forth. I'll put more in there that I'm gonna be entering. You're sub anti, brother. How you doing, man? Hope you're well, bro. But yeah, let's keep it pushing. That's Ondo. Hype. Again, huge selling pressure on a hype. A huge amount of oh, this one was so clean. Did anyone actually take this? Because I gave this here, right? This one was I think I gave this exclusively here in my own server. I didn't give this anywhere else. We had this, right? We had the 886 of the deep crab. We had the 618, the 1.618 of the normal crab. We had a really nice PRZ. So what I said was, watch for distribution around the PRZ. Here's your original resistance. Here's your radon liquidity. Here's your reconfirmation of resistance right here. Beautiful distribution. And look, what took absolutely ages to build up was outdone in one. I repeat, it was outdone in 1 4-hour candle. Boom, all the way back down again. Right, but this now, buy seem to be holding. So if you want to get into some spot hype here, start layering in. This is completely fine now. Okay, you want to get into some spot hype, this is where you do it. Okay, invalidation is basically if you get below. For me, it'd be if you get below 11.84. But if you want to play even tighter, you just treat it like a leverage position. Just say if you lose the mid, you're gonna get rid of your spot bag and get in if it ever reflips or if you go down towards these lows, right? You can do it either way. But if you want to do the 20-40-40 rule, you can definitely enter some spot here on hype. If you haven't already, you should already be in because I've been talking about this one for a long time, right? But if you weren't in and you're getting a second chance right now, right? Invalidation is easy. Don't go all in. That's all, right? But now if this holds for hype, you're not gonna get lower. Okay, you've got up, you've come down, you've got this sort of double bottom kind of structure where aggressive selling is taking place both times. Don't be surprised if it does bounce up from here. Okay. If 1184 is ever lost, because that's the log shallow golden pocket liquidity rate, right? That's the 4-on-4. Then you're looking at 956 at the 786, and if that's ever lost, you're looking at $6.26 at the 886 for hype. Otherwise, yeah, hype at the area where if you're gonna get in, screw the FUD, screw everything else, just stick to TA, stick to risk management. This is where you get in. Okay, if you just always start layering in spot hype, and if you want to exchange play, honestly, I think hype's gonna be the one to go for. It's just what it is. So yeah, definitely. This is gonna be in mine, right? I've got some already. I'll size up, right? This holds at the daily close, so on and so forth. But this is where you're gonna get into some spot hype if you haven't done so, and you would like some. Right? Of course, you don't have to get in if you don't want this, but if you want some of this in your port, do the fundamental research yourself. Right? I'm going to show you guys a good TA, show you guys coins, but you decide what you want in your port. I'm not going to be telling you should have this, this, and this. That's up to you. I'm going to be giving you entries, risk management. You choose what you want for your port. Right? I'll be telling you what I do for mine. You can try and copy me if you want. Otherwise, you should also get into the habit of making your own decisions too. Right? I'll be here to give you a helping hand, push in the right direction, answer any questions you have, but your money is your responsibility, right? Learn to take full ownership of it. Choose what projects you want, right? Be proactive with your portfolio planning. All this will go a long way in building confidence, and eventually you get to the point where you won't have to listen to me anymore, right? You can go and do this on your own. But this is a beautiful area for hype, okay? Very, very beautiful. In terms of TA, that is it. Easy area to manage risk. So that is hype. Let me check back to the chat in case there's any questions. Right, that is fine. I'll keep it in here just in case anything crazy happens, right? But no, low volatility right now. Not surprised, it's the weekend. So that is hype. Let's take a look at Doge next, right? Look again, beautiful. This is what significant levels mean. Look where you bounced, the zone we had marked out before we even got here, right? Originally, what did we have here? We had one big zone because on the monthly you can see higher time frame. This is the area where the buying and the selling pressure increases and decreases. We can see that very clearly, right? But obviously, what I said was, together from 14 cents to 21, that is way too big of a range to be doing in one, which is why I split this into two for you guys based around yearly levels, right? 2022 2024 level was one zone. If you lost that, we're saying we're coming down to the 2021 to 2022 level down here, two zones. We bounced off the bottom of the zone, went to the mid of that zone, rejected, and now you're back down. Every beautiful, right? Learn to find significant levels. That's this. So now you're retesting the breakout. Again, if Doge closes like this, right, you have a very good reason to actually try for a scalp to swing mindset long on Doge, right? I'll do something like this, for example. Wait for the close, I'd say, or if you're going to do this, wait for the hourly, right? So if this hourly closes above, actually, no, based on the hourly, I'll do something like a bit tighter, right? So let's do this. Let's take a look. We have on hourly deviations are low. Actually, you know what? Yeah, if you lose this, if you close below this area, basically you're just gonna cut. That's about it. Basically 2% risk, 2 to 3% risk, right? And again, scalp the swing mindset means your initial target's gonna be based on risk to reward. So for this, I'd go for a risk to reward of 3 minimum, simply because that'd be correlating with these highs, right? And then if you flip that into support, so on and so forth, you can then slowly size up and try to turn it into more like a swing play, right? Otherwise, it's a scalp the swing mindset trade. But that is Doge, okay? At the key area now, again, if it's successful in holding, no reason to be thinking lower. Ultimately, though, I would absolutely love, right? I would absolutely love for Doge to come down to the 886. Okay, this would be absolutely amazing. Get the 886 and then go higher. That'd be nice. But yeah, that is Dogecoin. Finally, we've got PAL, right? Back above the 886, trying to fight against it right now. Anytime this gets above the 886, I'm going to be sizing up. This is one of my AI plays. The other one might be Tau, or I'm not sure yet, because for things like AI, I just prefer, like, going a bit further out on the risk curve, right? When it's narrative driven, because these have the high chance of making those huge gains. So I'm going to be focusing more on PAL, but if you want a safer bet for AI, just go with Tau, right? Because that's more established. But anytime this is over the 886, I'm just going to be sizing up. Like I said, we've got the wave structure on the macro, we've got the type 2. If we do get one more drop from that rejection, looking at the 1.13, right? And if we do get that and we see bullish structure coming in there, again, I'll be adding there instead, right? With my stop loss or break even already. But yeah, that is PAL. So that is some of our main coins that we've gone over. Let's look at some more. We know there's a few more that we like to look at. Let's look at LDO, right? So this one went all together for a risk reward of 1.92. No one should have taken any profits, right? Because I didn't give any scalp plays for this. I gave this more as a, yeah, it'd be nice if you got here. So put your stop loss to break even. You probably get stopped out if you put your stop loss to break even, but just don't let this green trade go red, okay? Put your stop loss to break even. Because, it doesn't make sense to TP too early either, right? And again, maybe I would have, if I actually saw that distribution real time, I would have gave you guys the warning that, okay, look, even if you haven't hit targets, I'd cut position here, simply because we're distributing at predefined levels, right? This level was predefined. We've got the inverted smiley face. I would have given you the guide, but like I said, I've not been active at all the last like 10 days because I've just been really, really busy, so I couldn't do anything, and that's my bad. But yeah, again, on the higher time frame, however, nothing terrible about this whatsoever, right? You bounce off the 886. You can chop around some more. The PRZ is deep, right? You can go down to 62 cents if you want. But right now, what you have, of course, is a zone. Again, this zone right here is your first line of support. If that is lost, that is when you're looking at the actual deeper zone being hit. Again, just segment your levels into the criteria. Don't just look at one thing as a huge key area. It's going to be hard to manage risk them in that. Right, but that is your current outlook on LDO. As long as this red box is holding, ultimately you go higher. If you lose that, then you go down towards the 2.618 to this demand zone, and then you'll be looking to bid there. Right, so that's LDO. OP, rejecting off 2022 12-month seller zone low. Absolutely disgusting in that regard. I would really hope that you would have reclaimed it, but it's what it is. So what we can do here now is, of course, we've got the macro read here we can put down, right? Which we haven't put down yet, but this right here now, based on the 2022 candle, what this is this right here is the macro read of this area. So we're gonna turn off the 0, and I'm just gonna mark that out. So this is 2022 12-month, and that's the low, right? And then 2022 12-month macro read. This is your buyer zone mid. That's what that is. So if you do, like, if that rejection is true and we cannot maintain at the 886, this PRZ basically, we can't maintain there, we're not going to be surprised by 65 cents OP. Okay, like we know this now, you can see, right? Key level there in 2022. We have some significant levels in that area. So that'll be something to watch for. On the higher time frame, however, again, on something like the weekly basis, right, it's not the end of the world. Even if it does go down there, if it's quick and you accumulate and then you come and recapture this as support, you put structure in, everything's going to be happening at a macro key level, right? So it's fine. Plus, the macro shock, that's just the 886. We know shocks can go deeper than the 886. So no problem whatsoever there. That's fine. Arbitrum, ugly. No point looking at this here. GMX, ugly. Like low risk areas, so I'd pretty much just wait for a rate of the lows, right? That's it. I'd wait for the rate of the lows for GMX. I think that's inevitable at this point. AVAX, we've looked at PAL, we've looked at Cetus. Beautiful one to eye. Look what happened, right? That trade setup I'd given for Cetus played out to the dot, right? We went up, hit the rejection, went above of course of it, but that was the trade setup. We said if the 886 is held and you get above the Gartley, your liquidity run is going to take you with your C point. You've got the highest confluence was at this area, right? So this one was a cook, right? So Cetus, I've closed 80% of that trade. My stop loss is a break even. So I don't care if I get stopped out break even here now. Okay, I'll just re-enter again should the signs of strength come in, or I'll size up at this potential smiley face that we are now currently building. If that smiley face is confirmed, don't be hesitant to actually try for entries. Okay, it's be very easy to manage risk because all you have to do is close below this and you can cut. But this is Cetus. DeFi play. Think how is total DeFi looking? It's looking amazing, right? So it makes sense to have some DeFi bets in your port. Okay, so Cetus is my DeFi bet of choice. ENA. Again, went to the same level, 2.0, nothing's changed, right? The same levels on my screen. This is why I keep telling you guys, if you truly have significant levels on your screen, you are not going to be changing them every other day, every other week, right? So, this is key. ENA, however, right now, okay, this is important. Look, if you hold this level, and you put a smiley face here, you are now putting in a smiley face above your macro point of control. That is serious. Take that seriously. Have some... If not it's an ENA, but you would like a coin which you can manage your risk on, this would be one of them. Okay, as long as this smiley face is intact, as long as you're above basically 0.3583, but ultimately above 0.3692, you're looking for higher prices on ENA. Like we've had multiple drives of bullish divs. We have a rounding bottom here. You're compressing. So if you're above the macro point of control, take that seriously. We know how serious of a level the macro point of control always is. Okay, as long as you're above this, you're looking for higher. Of course, the macro point of control might change, but currently this is the macro point of control, right? So as long as you're above this, you're looking for higher. You could literally do this based off the hourly if you wanted to, right? There was your hourly. In fact, there was your hourly SFP. When you saw this, that would have been the entry to take, right? Stop loss a bit below, account for deviation, something like this perhaps, right? Or in fact, I'd keep it tight if you're playing into the level, and then you even just risk the reward of 3. Would have been up over here, and then ultimately like this is something very, very viable. So you can scalp the swing mindset this very easily. You can do the same for spot. Okay, your entries 20, 40, 40, you get that daily close above. In my opinion, as long as you're above this zone, you manage your entries around this zone. If you get rid of this, if you close below this zone, just cut it easy, because then you're looking at the 0.5 again. If you lose that, you're looking at the 886. You're looking at the actual PRZ, right? But above this point of control, you have smiley face. Okay, that's all that matters. So that's CNA. Toncoin, beautiful, right? Beautiful. Above your actual trend break. So you're below. You rejected off your 2022 level for now. 2022 macro read seller zone high, right? But you're above your 2024 12-month macro read buy zone mid. Again, key levels to key levels, right? Elite system, honestly. But from here, if you can chop, you can drop down. If you lose this, then you're looking for your scalp to swing mindset shorts, especially if you then put in now distribution. Be very careful of distribution at this area. Right, local distributive structure. If you break below and then you come up and again you put that inverted smiley face, and you can try and take a short back down towards here for some higher time frame smiley face perhaps, right, and then go higher. Otherwise, as long as you're above this level, nothing to worry about. Right, ride this high. So I'm still in my ton position, and we entered at the 786 basically, right? So my entry is literally 2.5. So this one was a serious cook. That was like from 2.5. That's like nearly 50%, I believe. 60%, right? 60. 2.50 something. It was 2.50 something our entry. Yeah, 62% pump in price. So ton was absolute cook. So yeah, nothing much to say here really. I wouldn't enter here right now as we're speaking, unless it was scalp to swing mindset trades, right? Again, if you are taking scalp to swing mindset trades, you're doing this, accounting for deviations. I'll do something like that, and you're playing this to the high. That's it, right? But you're not going to enter your entire spot bag. I mean, you can, but it's much better to, then I can remember, it's much better to do smiley faces, right? And ton is one of those ones where you could argue on the daily trend is beginning to shift. Last lower high, that letter lower low has been taken out. You're just waiting for a higher low to come in. We just don't know where the higher low is going to be, or if it's going to be a higher low. It could easily go and give us another lower high, right? That's why scalp the swing mindset trades until trend is crystal clear. Okay, this is literally, you could take this right now if you wanted to. Okay, this is Toncoin. If you're taking leverage plays, maybe just it's the weekend, go reduce position size, right? At the end of the day, risk management first and foremost, but this is something viable right over here. That is Toncoin. XMR. We looked at this. Ryu asked for lower time frame analysis. Lower time frame analysis is basically this. If you go to the daily, what we have over here is a gap, right? We have a breakaway gap on XMR. A lower time frame analysis would be just for you, Rai, when you're watching this later, brother. This. If you actually catch this flip, actually wait, hang on. There. This right here is beautiful. You could try for this, right? As a lower time frame play, this is what you're trying for. As long as you're above this level. If you lose this level and you go below, right, I'd be looking to attack the mid and for basically bullish structure to come in, some sort of smiley face, anything like this to come in based around this lower half of the zone. Fill the breakaway gap, and then maybe, you know, wick, reclaim and go, something like this. Those are what you're looking to enter. But as long as you're above this red line of this box, of the breakaway gap, you're looking for plays to the upside like this on XMR. Okay. So that is XMR. And Litecoin, let's take a look. Dino day today. We have, let's go to the daily, right? Yearly level rejection again, same thing. I wouldn't do anything here. I don't see any significant levels in this area, right? I'd be interested in 76, 74, or simply at a reclaim of 93. Over here, I just, it's sort of in the middle, right? Is what I'm trying to say. I think the better levels are either down here or a flip. So I wouldn't do anything personally for LTC over here. I don't want to give just trades for the sake of giving trades, right? So over here you have one rejection, sure, but more often than not you either blow past or you blow below, right? So for me, like, either get here or get higher. That's it for Litecoin. Apart from that, we can just space bar some anchor. Look at that weekly, massive weekly SFP of the weekly supply zone below the 2020. I wouldn't enter base off that candle. Flip, sure. Below, no. Rune actually holding, that's fine, right? It's literally just going sideways. Very low volatility right now. DYDX, reclaim for entries. I believe that was what was last said, right? So this one is fine. I wouldn't enter anything here. If stop loss are break even as well, because it doesn't look like the target's gonna hit. We had a risk reward of 3 first. That was basically up over here, right? At this, that target hasn't hit, of course. So just put your stop loss to break even. Metis, yeah, I mean, you've got a butterfly, but no follow through yet, right? No follow through yet. So currently below this red line, I wouldn't do anything, right? You're only interested in it above that red line minimum. Otherwise, you're looking for that blue line, 1027. MKR, very beautiful, right? Very, very strong. The thing I'll be looking for first is, of course, the supply line. After that, I'll be looking at the 786 Gartley. There's going to be the 886 of the shark after that, and then ultimately the 1.13 of the shark, which is what I've currently got down on the screen. Right, we entered this at the 1.13, so we're very far away from invalidations right now. Right, I'm still in my MKR. Farcoin, insane rally on Farcoin. Right, we had a really nice move up. If I go over here, wait, is it here? Yeah, ABCDs. There we go. We had an extremely potent, right? We had an extremely potent PRZ, and it just played out. That's all it is, right? You got the PRZ hit, you went up. However, just do bear in mind this is another lower high. Right, trend hasn't really shifted yet. Okay, on the weekly, that is a very clear lower high. Right, so let's see if we can flip this into support though. If it didn't enter originally, this white box here, that's where you're looking for entries next. Okay, if we can flip this into support, what was once resistance, flip to support, then you'll be looking for higher. Farcoin, I'm still in my original entry, so all I'm going to be doing is sizing up. Right, all I'm going to be because I took some profits on this little move up, so I'm going to be sizing up. That's all. I will let you guys know when I do size up, but if all I'm looking for is a clean flip of this area for a size up, that's it. I'll do a bit of size up here and then a bit of size up when you're above here. Your average is basically going to be dragged somewhere below the white box, because literally my entry is 0.20 cents right now, because we entered at this drop here at the mid of the order block, right? So I'm just looking for a reason to size up, which I don't have quite yet. I need a bit more reason than this, right? I'm not going to look at ME. I'm not going to look at NOTs. They're all dog shit. Yes. DOT. Looking similar to Aptos. Right. This is what I kept saying originally. So you put your stop loss to break even on that original entry from the mid of March. Okay. It looks like it might get hit. Don't let a green trade go red. Stop loss to break even. Tara. We're finally into the weekly order block. Okay. The mid to the low is what I'm interested in on Tara. Either the reclaim of the top to confirm some sort of smiley face, or the actual thing I'm interested in is the mid to the low. The raid would be especially amazing. Tara, I'm really interested in. The structure is really nice. M shape, right? You've got falling wedge, you've got strength, you've already had type 2 returns. If this level holds and you do get a breakout, you wouldn't be surprised if you got this 786, 1.272 butterfly, right? So Tara is a low cap. I'm willing to risk some money on. Nia, If you take a look at near again, you're coming back down to the Gartley, you're coming back down to the butterfly 2.24, 1.272. Above the actual, I need to do buy seller zones for this, to be honest, but even in terms of just historic action, we can see from here to here is sort of the area that you're interested in, right here. If you get below that red line, I would just cut it, right, until you get towards here, basically. Below this red line, you're getting this box. So basically, butterfly 1.272, sort of that area is where I look for that double tap, double bottom kind of scenario to get into near, if you actually wanted to get into this. Otherwise, just wait until you have a very clear sign that this PRZ has been respected. Right now, we don't. You're getting SFPs all over the place, right? But that is near. So we've gone through a lot of alts, right? Pepe, another one. Now this one nearly hit targets, and this one definitely hit profits, right? So risk reward of 3 minimum was taken. So this one should be risk-free, stop loss to break even if you guys took this Pepe trade I gave you guys, right? Based off the 886 being hit, and on top of the 886, the smiley face coming in, right? This one is fire. I know Saul's in a lot of these because he always puts it in the PNLs. If anyone else took it, please, do share the PNLs. I don't care if it's wins, if it's losses, we'll share everything. We're transparent, right? But yeah, Pepe. Now put your stop loss to break even at this point. If you do, however, now hold this white box, right? Again, you're going to get some sort of smiley face structure. So you're looking for a successful flip, ultimately of that 0.5 into support. That's where you're going to look to size up to push this higher now on Pepe. Okay. And last but not least, let's take a look at TIA. TIA, very, very nice. If I get rid of this here, we have the 886. We have a shark on TIA, right? Look, XAB 1.13, and then 2.618 pretty much, right? And then the 886, right? The 2.618 is down over there, right? We probably did actually hit the 2.618 there, very close, right? It's not a perfect 2.618, but we were really, really close to the 2.618, i.e. we're in a very, very nice PRZ for TIA, right? So again, if you come back down, first things first, for a lower time frame entry model, you're looking at a smiley face at this area. Initial support, radon liquidity, reconfirmation of support, right? But if that's lost, just PRZ. Anywhere between the 886 and the 2.618, right? That's where you're looking for the bottoming structure to come in. Okay, but many of these alts, as you can see, guys, many of these alts, you're going to go a long way if you just 20-40-40, change the ratios how you want to actually try and position yourself for the long term. Because ask yourself, right, who's going to make more money now? People who are shorting here or people looking for longs to the upside? The answer should be very, very obvious. Risk to reward at a significant time scale is not favoring upside moves, not downside moves. Okay. But apart from that, let's look at CRV. Right, CRV, we hit the yearly levels, 2023, 2020 yearly levels. Aggressive buying came in. They were not rewarded. Trap traders, they were forced to pay. Now, we have a zone between the white box and this. You can hopefully see you're trying to put a smiley face in. Right, so again, based on, just drop yourself with the hourly if you want a lower time frame trade, right? So what you do here is you do this, okay? You'd enter, your stop loss is very simple, it's going to be below that, right? And you're going to try and take this, minimum towards here, right? Scalp the swing mindset trades again, right? So you're going to do risk to reward first before this, risk to reward of 3 minimum, right? So you're around risk to reward of 3, you're going to trim some profits, put your stop loss to break even, and then try to attempt to turn it into a swing. That's all it is. And then you flip this, you just size up, and you just then go higher and higher, right? But otherwise, CRV now looking very, very interesting. If you look at this on the macro, you've got the bats, you've got the 886 being hit, a cumulative structure off the bats, you've got the falling wedge you're broken out of, you're doing this at key support resistance, so CRV looks beautiful, okay? Don't get it twisted, CRV looks really, really nice. But apart from that, Filecoin at the lows, literally at the lows, if you wanted to get in, could not get easier than this, right? Filecoin at the lows, so literally here. This is not even that, what's what I'm thinking of? This is not even that, like I'm trying to overextend the targets, right? This is very, literally just the range highs. Filecoin, another one you can try and get into, right? Those are the only ones I'm going to go over for today, right? So we went over CRV, we went over Filecoin. All of these other ones are shitters, we're not going to really look at that. Auction. You got, I think we looked at this already, but you got a extremely beautiful distributive structure on auction that sent us to this low, right? So my entry was 58 for this, right? So that's hedged now all the way. Like this is why you just, this is why you take the hedge. This is why you need to learn to hedge, right? If you'd been letting the FOMO get to your head and just letting this ride, as people like to say, this would not have been a good trade. you would have round tripped it very, very quickly, right? So auction, I am in a hedge for this still, right? I'm probably going to take profits soon, or before I take profits, I just need to see some sort of bottoming structure come in. That's all, right? Because my long entry is still $8, right? And I've taken majority of that profits out, but I do want to size up on it, and I'm not going to size up without now getting signs. So we probably get back down towards 11. If we see some sort of like support here, exactly like we did over here, I'll size up. Otherwise, I get stopped at break even is what it is, right? But I only have like 20% of the position size left now, so no worries at all on that. But yeah, so that was it for this, guys. Do you have any questions? I know some people have been joining, leaving, so on and so forth. No problem at all, Duke brother. Catch you soon, man. Go over VHS. Okay, let's take a look. VHS is in one of these playlists. VHS. There we go. VHS Soul. My beloved VHS. Okay, let's take a look at VHS. 12 months. Let's get rid of this. Let's do some fresh analysis. Okay. Okay, so VHS, fresh analysis. What we have here is, first and foremost, the buyer zone. We have, this is the, go to the weekly, this is end of, so even though it says yearly, it's not technically the yearly, right? It's like the, basically you can call this 3 months or even 2 months, right? There's your, this is what it is, 2 months. If you go to the monthly, you could go to the 2 weeks. Okay, so this is monthly, right? We have the high time frame right now is just the monthly, but since the 12 month is pretty much just the same, is there going to be a big difference if we do this and this? Okay, I'm gonna do this based off the yearly first. So we have, even though it's not the yearly, we're doing this based off the yearly time scale, which is why I'm putting yearly, right? 12 month. This is your 2024 12 month buyer zone low. 2024 12 month buyer zone mid, and then 2024 12 month buyer zone high. And then over here, what we have, of course, is our macro read. So we can go ahead and turn off the 0. No, we can turn off the 1. The macro read is right over here. We have our 2024 12 month macro read buyer zone mid. And then we can go and turn off the 0. And then we're going to put the seller zone down. Here is your 2024 seller zone based on the yearly. So we have 2024 all-time high. We have 2024 12 month seller zone mid, and we have 2024 12 month seller zone low, right? And this candle isn't closed yet, so we're not gonna do it based off that. So but even just looking at that, we can see why this was providing support, this was, and then now you've lost it. You've technically lost structure, right? So we need a reclaim of this, you know, super quick. We need a reclaim of this to actually go higher. Otherwise, this is a distribution was very evident up over here. Let's now go to the monthly to actually get more data on, right? So on the monthly, I'm gonna do this. Actually, let's start on the 3 months. That's the same. 2 months, same, but we now have actual completed data on the 2 months. So let's do this. Here is your 2 month buyer zone. Uh, 2 month, this is your buyer zone low, 2 month buyer zone mid, and 2 month buyer zone high. And then of course we also have the seller zone. The seller zone is right over here. I can turn off the I can turn this 0 off because that's already accounted for by this, and I'll just leave the other 2 on. Okay, so what we have here is we have 2 month seller zone mid, and then we have 2 month seller zone high, and then last but not least we have the macro read, right? The macro read is the overall directionality is from that peak to this low. So again, we're going to turn off the 0 and the 1. We're just going to leave that 0.5 on there. So then that becomes 2 month macro read seller zone mid. That's it. That's all the key levels we can really glean from this right now, right? Anything below this, yeah, it could be worth going into, but it's all right, right? These levels will be accounted for it. And of course, you can use fibs, you can use wave structures on top of this. But for now, I'm simply just going to be doing it based off this, right? So do we have any reason for bouncing where we currently are? Yes, like we had a seller zone here in the past, area where sellers took control, and now you're at that area. So again, as long as you can now flip this into support, again, as long as you hold this as support, you're looking for moves back up towards this minimum, right? If you can reclaim, then we can talk about going higher. If you, however, do not reclaim, right, and go and do that, then again, that's just further signs of distribution, right? And then we're looking for lower, in my opinion. So that's down VHS. Very new coin, so not a lot of data, to be honest. Let's see if we can use fixed range volume profiles over here. Okay, Porno controls below you as well. So, you know, you've got reasons to target lower, right? Take all that liquidity out and then perhaps push up from there. But otherwise, you know, you want this to hold, and that's a reclaim for you to have any shot at taking the highs again. Until you reclaim this, between this 0.5 and this 2-month low, right? Till you reclaim that, you have absolutely no shot of going to the highs. And even if you reclaim this, you've got to then get over this zone, the value area high. Only then do you have an easier and easier time to get to the highs. Otherwise, yeah, you know, lower seems more likely. If this doesn't hold, this needs to hold, right? That's the thing. But yeah, that is VHS. Your sub, Will, welcome, brother. Is this your first time on stream, or have you actually, you've been here once before, right? I think this is your second time.
Yeah, once before.
Yeah,
and good morning. Good afternoon.
Good afternoon, bro. Yeah. Just saw you came in. But yeah, so that was the stream. I'll upload this, guys. Let's quickly look at the order flow. How are we doing? Low volatility to be expected. No point looking at this really on the weekends. I just like to leave it open as a habit, right? As a scalper, the scalping side of me always wants this open. But yeah, nothing interesting. So I'm going to close this out. Wait, I'll close it in a minute. But yeah, so that is it from me today, guys. I hope you guys enjoyed that stream. I hope you enjoyed that bed shaker, bro. I know this is your first one. You know, if you think I can improve it in any way, let me know, guys, if we can make this easier for you as well. But otherwise, I will catch you guys in your respective one-on-one sessions, right? Or just in the chat, right? No problem at all. No problem at all, brother. It's my pleasure. It's my pleasure for you guys here. Yeah, once I've got all this hassle of, you know, getting the lease and everything sorted and all of that out of the way, I'll be going back to, like, pivoting back to regular / daily live streams again, being more active. So just hold out for a bit until then. But yeah, that is it from me today, right, guys? So I will be talking to you guys soon, and if you need me from anything, just put it in crypto chat. You know, stay in touch in crypto chat through DMs, and if you need me to look at any charts for you, just put it on the chart request, okay? Otherwise, I'll start sending out the signals, the calls, or rather just what I'm going to do, right? I'm going to start bringing that out through these streams and also through the actual respective channels. So yeah, but in the meantime, thank you so much, guys, for your time today, and I'll talk to you guys soon. Yeah, so I'll end the stream here.